Chances are you've ridden with Uber, ordered your favorite takeaway on Uber Eats, or noticed an Uber freight truck on the motorway. But is this tech disruptor a smart investment or just a flashy name stuck in the slow lane? In today's video, we'll dive deep into Uber's financials, growth potential, and risks to uncover. Should you buy, hold, or hit the brakes? Let's find out. Uber is currently trading at $67. Uber gets its revenue from three main streams. You've got the mobility side of things, which make up about half of Uber's income. You've got the delivery side of things, and you've got the freight side of things. Before going deeper into Uber, let me just show you a letter from the CEO when Uber first went public in 2019. Uber accounts for less than 1% of all of the miles driven globally. He acknowledges that we're only still scratching the surface when it comes to industries such as food, logistics, and urban mobility. These are things that were mentioned in 2019, and since then Uber has grown a lot. With any company, be it Uber or Apple or whichever company you can think of, it goes through something called a business life cycle. You've got the introduction stage, where a company is newly starting out. You've got the growth phase, where year on year they're gaining a lot of money, they're increasing their sales, and they're getting bigger. And then you've got the mature stage where companies, they level out, they have more of a stable income, they're not growing too much, but they're not losing money either. And sometimes if a company is not performing well, then it can start going into a decline. So an example of a company in the maturity stage is something like Apple. Year on year, it's not growing too much. However, they're not losing money either. And a company that's in the decline at the moment is something like Intel. I would say Uber currently fits in this growth stage. They only went public in 2019 and they are in the growth stage where year on year they are increasing their sales and they are rapidly expanding as well. So looking at Uber's investing page, you could see they've made 164 billion in gross bookings. They make over 31 million trips per day. They have over 161 million monthly active platform users and they operate in more than 70 countries worldwide, which is huge. And even in terms of drivers, they have 7.8 million drivers monthly. So it's a really big company and they're still planning to grow rapidly as well. So going through the company overview, in their last earnings report, you could see that Uber has come a very long way. They started in 2019 with 91 million monthly users, and now they've almost doubled that. It's at 150 million now. They made 50 billion in gross bookings and now they've made more than double, 138 billion. And even their adjusted EBITDA has gone up almost 4 times as well. So Uber, they've come a long way in just 4 years time when this report was made. Uber One is Uber's monthly subscription model where they've had 3 times the member growth since 2021. They have perks such as 0 delivery fee, 10% off orders, money back on rides, and exclusive offers as well. This is really good as a business because if they can get people to subscribe to their monthly models, then this is a stable income that they can get. You could see the different sectors within Uber. So just talking about their mobility side of things, the amount of sales that they are getting from it is steadily increasing every single year, and just last year 32% year on year. Even in terms of the EBITDA margins as well, they've increased it to 5 billion and they operate in more than 70 countries. They go into more details further down, which you can have a look at if you want, but this is just going to be a summary video. Even when you look at the delivery side of things, the growth every year is pretty astounding. Just last year alone, 15% year on year. And although initially in 2018, 19 and 20, they were negative in terms of making a loss, that's quickly gone into profit now. And again, these are just further details. This letter is from the CEO and this summarizes everything nicely. The main thing is mobility, year on year they've grown it by 24%. Delivery, they've grown it year on year 17%. Freight service, they've grown it 2% year on year, and they also have plans going forward. So one of their goals is to try and increase their Uber One membership. And this is a really good thing from the business side of things because then they have that steady income coming in every single month. It becomes a way of getting the customers in and keeping them in once they're there and not just a one-off, I book a taxi just once a month and that's it, that's me done. And this is a way where customers come in and then they stay in and continue paying Uber in the long run. The CEO also talks about some of the autonomous vehicle plans as well going forwards. So they've partnered with a few companies such as Cruise, Coco, Wave, WeRide and Avride, and so on. And then this is just a summary of what we've spoken about as well. The outlook as well looks really good so far. Let's jump into the numbers. So this is the balance sheet for Uber. It's their income statement. And if I was to switch to quarterly and I look at their total revenue, year on year, it's increasing. Nothing to worry about in this sense. Even if I switch it to annual view, 2020 it was down but that's mainly because COVID, no one was going out getting taxis and things like that. But now it's just a straight line up, and they're increasing it from 7 billion to now 37 billion, which is huge. The other things with Uber, you could see they've got a very low PEG ratio of 0.82, which is amazing. A PEG ratio of less than 1 means a company is very undervalued. A PEG ratio of between 1 and 2 means a company is expensive, and a PEG ratio of over 2 means that is very expensive. Their current ratio is greater than 1, so their assets can cover their liability. They've got a quick ratio of over 1 as well, which is also good. And this is just madness. In the last 5 years, every year they've increased their sales by an average of 35%. Last year alone, they've increased their sales by 16%, and just last quarter, they've increased their sales by 20%, which is absolutely amazing. Where I have a problem with Uber is if you look at their earnings per share, it's mainly been negative. Only last year it's become positive, but you could see the overall trend. You can probably draw a line and make it go this way. Now that Uber has become profitable, you can make a prediction that this will only increase over time. The other problem I see with Uber is their shares outstanding. However, this I'm not too concerned about at this stage, because Uber, like I mentioned earlier, they are in the growth phase of the cycle, meaning if they do need to raise capital, they can either take loans or they can sell their shares and use the money to grow the company. And from the two options, diluting the shares would probably be the better thing to do, although it's not the best thing for the investor because the value of their shares essentially goes down. Going forwards, as Uber does mature as a company, I do expect this to start coming down and Uber potentially buying back their shares as well. Having a look at Uber's revenue by segment, so you could see every single sector of Uber is expanding. So if you look at the purple, which is the mobility, the Uber taxis, that's increasing. If you look at the revenue gain from delivery, so your Uber Eats, that's also increasing year on year. And even the freight services, they're increasing as well. And if we look at the earnings, you could see the EPS, the earnings per share. You could probably draw a line straight across like this, and that represents Uber. But the main thing I'm interested in is the revenue. And you could see over here, they've achieved all of their revenue targets except maybe 2020. And again, you could blame COVID for that. But other than 2020, they've achieved all of their revenue targets. And going forwards, in 2025, they're expected to grow 15%, and the year after 15%, and the year after another 10%. So this company is a solid growth company. When it comes to the outstanding shares, with them diluting their shares, this has already started changing because Uber announced that they are going to start buying back some of their shares. There's plans of Uber buying back $1.5 billion worth of shares, and one of the targets from the CEO is to continue scaling their free cash flows significantly. The CEO of Uber acknowledges that their stock is undervalued, and their CEO is quite confident about Uber as a business, which is really good to hear. When it comes to price to sales ratio, is the actual market cap of the company divided by the amount that they make through sales. So the smaller the price to sales ratio, the closer to 1 it is, their market cap is exactly the same as what they are making from sales. For example, if I had a company and the market cap of my company was $100, and let's just say I make $100 in revenue with my company, that would give me a price to sales ratio of 1. Now on its own, this price to sales ratio means nothing. However, what I like to do is compare this to where the company has been in history. So you could see here, the price to sales ratio currently is 3.34. However, the 5-year average for this company is 4.06. So right now, because it's getting closer to 1, that means Uber is cheaper right now than it has been over the last 5 years, which is really good to hear. The other thing I wanted to look at is some of the financial ratios for Uber. So the first thing I want to look at is the free cash flow per share. You could see the free cash flow that Uber had, it has been negative. However, since 2022, this started going up. This, you can identify a trend. I can draw a straight line going from here all the way up, showing that the trend for free cash flow is going up, which is really good to see. The other thing I wanted to show is the margins that they make. So this was negative, however now it's starting going positive, which is also really good to hear. Their net profit margin, again, that's become positive now as well. So Uber, they are doing the right things so far. They've also in the past acquired a few other businesses. So for example, they've bought a 30% stake in this company called Grab, which is one of their competitors, in 2018. So Uber, in terms of their financials, as a growth company, they're doing really well so far, and it looks really tempting. However, how does Uber compare against its competitors? And that's what we'll explore right now. So here I've done a table, and I've got Uber here, Dash, Lyft and Grab, some of Uber's competitors, all on this table. And I've only put a few metrics here. Of course, you can go into more details, but just for simplicity. So when you look at the market cap, Uber is the biggest one over here. So I'll give Uber the number 1 here. You might think that, okay, a smaller market cap means the gains that I can make from this company is much more. And you're correct in saying that. However, the risk is higher as well, because the lower market cap companies, they can go down more than you can think. However, the higher market cap companies, because the market cap is so big, more money is required to move the price both up and down. So in terms of market cap, Uber is winning from the 4. I've given Uber a score of 1 so far. When I look at the forward PE, lower is better, and over here Lyft has the lowest, so I'll give Lyft a point here. Uber is second, is still low, especially compared to Dash where it's 85 or Grab where it's over 100. If I then look at the PEG ratio, these companies, because they're not fully profitable yet, they don't have a PEG ratio, whereas Uber has a PEG ratio of 0.82. Uber over here wins, and I'll give it another point. The price to sales ratio, lower is better. Lyft wins over here, so I'll give Lyft a point. Uber is second here, so it's still in the mix with Lyft. And when it comes to sales, the winner over here is Lyft. However, Uber is still close to the 20% mark, whereas these are over 20%. So you want higher sales, essentially. You might think from looking at this table, okay, Lyft wins, so that means Lyft is a better stock than Uber. However, one thing to be aware of is Lyft's market cap is only $6 billion, whereas Uber is $144 billion. The size of Uber compared to Lyft is really big. So I wouldn't personally take the risk of investing in this. And the reason why is just having a look at the charts. So this is the chart of Lyft, and you can see it's just down. It's close to its all-time lows. And if I switch to Uber, it's close to its all-time highs. So it's very contrasting charts, both of them. Then the question comes, Uber a buy or is it a sell? Or what do we actually do with Uber? And for me, Uber is a buy. Uber is a really quality company, and I'm really impressed with the growth prospects of Uber. It's expected to grow 15% over the next few years. So I bought Uber on this date over here. I bought at $61, and I'm going to continue buying Uber. However, I'm just going to wait to see Uber just hit the moving average over here. So I'm just going to wait for it to come down a bit and maybe add under $63 and below is where I'll be looking to accumulate more Uber. This is a very high quality company. The final thing I wanted to do was compare how Uber has performed compared to some of its competitors, Lyft, Grab, DoorDash, and the S&P 500. Over the last month, Uber has outperformed all of the other companies here, so Lyft, Grab, DoorDash, and S&P 500. Over the last 6 months, DoorDash has been the winner. Year to date, Uber has been the winner. Over the last 1 year, Uber has only grown 3%, whereas some of the other companies and the S&P 500 has far outperformed Uber. However, over a 5-year period, all of these companies have been in the red. Just Uber and S&P 500 has been in the green, and Uber has outperformed the S&P 500. My opinion is, whenever you buy a stock within a sector, you need to choose the best stock in that sector and invest in that. So I don't see the point in investing in some of these other companies, because over the long run, Uber has outperformed them. I believe that winner takes all is a concept where the best company within a sector takes all. So if you look at the semiconductor sector, Nvidia is the clear winner, and it's taken market share from a lot of companies in that sector, and not many can compete with them. And I think Uber will do something similar in this sector as well. Yes, there are risks with Uber. So one of the risks is, Tesla, they're going to be doing these robo-taxis. Waymo are doing their autonomous vehicles. These are all risks posed to Uber. However, I think this is going to be positive rather than negative. And the reason I think it's going to be positive is because I think Uber will end up partnering with these companies to provide a better service. Uber has also recently partnered with Nvidia to accelerate its autonomous mobility as well. So Uber, they're already doing their bits to try and make their company better, make them stand out from their competitors. So I think Uber has that competitive edge compared to its competitors. And I don't see Waymo or Tesla as a threat to Uber. More than anything, I think they will partner in the future. Morningstar rate Uber as a 4-star company, and at the moment they label it as a narrow economic moat. However, they are saying it's stable, and they are saying that as Uber gets bigger as a company, this will probably change. The fair value estimate is about $79. Even if you add a 20% safety margin, then that brings it to about $63, and my entry price was $61, and I'm still going to be looking to add to the position at less than $63. Of course, none of this is financial advice. However, I think Uber has a really good future, and this is a company that I'm going to be adding to, and I've already bought as well. If you like this video, please like, subscribe, and share with others. Thank you.